away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
You're watching Countdown right here on Bloomberg Quint. It's a fairly lackluster day of trade for the markets, with the Nifty trading marginally higher in trade this afternoon. But let's get you the headlines for now before we take you through the moving parts of the market. The markets are off the day's high in a range-bound day of trade. The Nifty trades around the 10,300 mark. Most sectoral indices, barring IT, trade with gains. IndiaNivesh Housing Finance sees its biggest intraday jump since 2014. Management says it has enough liquidity on its books to take care of any adverse circumstances in the future. Persistent Systems has seen its biggest intraday fall since listing. Post its second quarter earnings, management says that IndiaNivesh has not defaulted on its 43 crore exposure yet. And high commodity costs may keep Asian Paints' profit muted in the second quarter. The paint maker may report a volume growth of 8 to 10%. Good afternoon, Neeraj. So fairly lackluster day's trade, went sub 10,300 for a brief moment and come back right up.
Yeah, I think the takeaway though could be with oil and gas. Yeah, oil and gas doing what it is doing. Banks are able to support and keep us in the green, so which is actually a good sign. And this is despite, I think, select stocks like IndusInd Bank, RBL, etc. not looking all that great. So let's talk about all of those. First, the index about 0.25% in the green. The Nifty Bank, though, about 1% higher, and I think that's the good thing because the Nifty Bank has gained some steam in today's session, 260 points. Remember, in Friday's session as well, the Nifty Bank fell only 0.4%, when the Nifty fell over 1%. So banks have been holding out reasonably okay for themselves. The market breadth should come up on your screen for a moment before I go over to the heat map. And the number of declines and the gap only yawning, which means that the mid caps and the small caps aren't doing quite well. However, I'm sure we'll talk about that. Agam will probably talk about the liquid space, but let me talk about the large caps, and the heat map should come up on your screen. And look at the bottom of the screen. Stocks like IndusInd Bank, which are down 5%. Reliance Industries is now in the red. Another couple of percentage points gone for that one. And oil and gas by and large, so BP, HP, IOC, ONGC, Reliance Industries, all of those stocks have come off, and stocks like IndusInd Bank too under pressure. What's doing well? IndiaNivesh Housing Finance, and we'll make you hear a small slice of the conversation that the management had with us today. The stock is up about 10% though in today's session. Gains for ICICI Bank and HDFC Bank, so the two private lenders have done reasonably okay for themselves. Stocks like NTPC have not done too badly, and Maruti, ahead of the numbers this week, is up about a couple of percentage points, so this one has not done all that badly. Even Stevens for the market breadth on the Nifty, at least, even though the broader markets haven't quite showed the kind of strength that the index is exhibiting right now. But I don't know if the color of the stocks falling or gaining is the same as what's happening on the large caps, Devina. I do know that certain select mid-cap banks, the likes of RBL, etc., have corrected quite viciously today.
Well, and you're seeing some of a respite in the NBFC space, particularly, some names like Muthoot Finance, Cholamandalam, these are seeing some green shoots. But aside from that, the flavor still remains slightly more flattish, and not too much happening, except for specific stock moves that we are noticing. So just a quick look at what's been happening within the mid-cap space and what's been moving around there. To start off first with heavy cuts that we witnessed in the day today. So double-digit losses coming in for an Infibeam, which actually suddenly saw a crackdown in the mid-afternoon session. The stock's trading under by about 21%. Persistent Systems, on the back of its results, the stock has been beaten down heavily, 16% right from the start of the trading session. No respite on this counter. Divan Housing Finance continues to lose. So today again, yet another down day for Divan Housing Finance. Amongst the other NBFCs that have gained a bit, you've got a Muthoot Finance, which has gained about 5.5%. Cholamandalam is up about 4%. And Repco Home Finance sees some bit of respite, which is trading with gains of about 5.5%. Stocks which have seen movement on the back of heavy volumes. You've seen a DB Realty lose 14% on the back of 25 lakh shares being traded. Dish TV is down a heavy 7%. This one trades 1% 1.3 crore shares. So a heavy push on the downside for Dish TV. And RBL Bank, like Neeraj highlighted, the stock's down 6% and closer to 56 lakh shares have been traded there. Aside from that, a few other small cap losers include the rights of Mansali Engineering on results is down 20%, DB Realty is down 14%, and GTPL Hathway is down about 10 odd percent. But let's talk more about the liquid space and what's been happening in the futures and options segment. Agam joins in for that. Agam, good afternoon.
Good afternoon, Devina. Well, we are seeing largely range-bound trade, albeit we have seen the benchmarks, make considerable moves. That said, Nifty hanging around just above the mark of 10,300. I'm seeing consolidation continue. Let's pull up your futures and see what's happening with the Nifty futures. There's about a 1.3% increase in open interest. The Nifty banking futures too, not too much to speak for, though here the change will be slightly more than the Nifty futures. So if we can have the Nifty bank futures up on screen as well, there you have it. That's where you're seeing a further advance and an increase of as much as 7% in open interest. The India Volatility Index, which did move above the mark of 20 early in the day, it holds on to 20 at this point in time, though it has come off to a certain extent at 20.4 to be precise. In terms of your open interest distribution, that currently remains with 10,600 on the higher end, and on the lower end, of course, you have 10,000. But when it comes to changes in open interest, as one might expect, all the activity is around 10,300 and 10,400. So if we can also have the changes in OI, there you have it. That's where you're starting to see a little more activity build up, considering the consolidation that we've seen in today's day of trade. That said, let's take a look at the futures then, and we do have a 33% increase in open interest for HCC. Now, its underlying is declining by as much as less than 1%, but there has been considerable accumulation, so watch out for this one. United Breweries is the other one, and this once again is where we've seen considerable increase in open interest, whereas the underlying, it makes marginal movements of as much as 2% in its advances. There you have it. It's actually given up from the day's highs, and it's now up only 1%. And one other stock which actually stands out in trade towards the losing end, we have Bajaj Finance down 1.2%, 24% and in OI, along with more activity in the NBFC space. But Bajaj Finance, for a change, not losing out as much as some of its other peers, which continue to take a hit. For now, however, there has been an increase in 26% in OI. So I'm going to keep an eye on these three stocks as we move into the final hour of trade.
All right, Agam, thanks very much for that. That's the futures and options wrap up and how we're positioned for trade this afternoon. I think we have Kansai Nerolac numbers. Revenues have come in at 1293 odd crores. It was expected slightly higher. At 1,318 crores versus 1,164 crores. So that's come in slightly below estimates, probably at par, just a few crores here and there. Wait to see what the EBITDA looks like. That was expected to come in at 223 odd crores. That's coming at 194.8 crores. So that's a significant miss, at least in terms of what the Bloomberg estimates were. That's 223 crores, which was the expectation. So it looks like...
And the bottom line too, at 122 crores, is lower than what the 144 crore corresponding quarter number was.
Yeah, so the stock there down about 4.5% at 397. So disappointing quarter nonetheless for Kansai Nerolac. We'll have to wait and watch as to what has caused this. Obviously, crude oil prices and the implications of that probably would be one of the key factors, hurting them this quarter.
Yeah, I'm guessing that would be it. And EBITDA down over 12% to margins at 15% versus 19%. That says it all. However, it's Monday. Good time to get in a global voice, something that we do almost every week. And joining us on the show is Richard Harris of Portshelter Investment Management. He joins us right now to talk about his thoughts on what the world markets are looking like. Richard, good having you. Thanks so much for joining in. Do you believe this Jamal Khashoggi declaration or other explanation given by Saudi Arabia and the resultant disbelief of sorts that almost all the Western nations have expressed, does it have the potential to snowball into something much larger than what everybody might be anticipating right now?
I don't think so. In fact, I think it...
Oops, I think we just...
And in some ways refreshing that the although the Saudi story has changed, it's now starting to approach what most people believe is the truth. And I think, that's positive. Naturally, for political reasons, they will have a fall guy. They will find him. They will punish him or them, whoever they are. And I think that'll probably be the end to it. It's not completely the end, because clearly there has been a great deal of, should we say, faith equity lost by this situation. And the sheer embarrassment of having the elderly king have to stand up and deal with this issue in public, I think it's been very difficult for Saudi Arabia. So I think in terms of reputation and trust, that the kingdom has been quite severely damaged. But I suspect that if they're able to keep their noses clean looking further out into the future, that will disappear, because, of course, Saudi Arabia is the swing pumper of oil in OPEC, and that's not going to change anytime soon.
So if that's not a concern, what do you think is the near-term outlook? Is there a possibility of, either due to the expectations of a faster rate hike, and I think the Fed minutes gave some indications of that happening or likely to happen, or this resultant or this ensuing pullback of monies from the equity markets of the emerging market pack? Do you think all of that has the potential to drag the EM pack lower from where we are right now?
Well, I think what's happening in China is quite significant. The authorities have obviously come in to try and deal with what was a very difficult market, with the market falling off quite substantially. The authorities have come in to try and put a floor on it. I think that's quite significant. And I think that it really shows that the authorities now are quite keen to see some stabilization in the markets. That will probably rub off to a certain extent on the emerging markets. It certainly will make Western investors feel that perhaps there is a bottom there. And the other thing that is often pointed to, but everybody's been worried about catching the falling knife, is that valuations, of course, are now quite reasonable in emerging markets. These are often good companies in growing markets, in growing economies. And as a result, we may well see some liquidity come back in. One of the issues is when people feel that maybe valuations are too high or prices are too much in the US, and if they feel it's a risk-off scenario, then they may well start to creep back in. Emerging markets have suffered from a strong dollar, and that probably won't change anytime soon. But it does look as if maybe there's a flaw, which has been kindly put there by the Chinese authorities.
The other point being crude. We've got Brent crude, which has come off, trading closer to 18. NYMEX WTI crude has come sub 70 now. What's the outlook here, and where do you expect crude oil prices to settle, and the implications of that?
Well, I think crude is pretty well settled around the 80, sub-80 level for quite a while now. It's been moderately stable, despite the fact that sanctions with Iran take pretty well a million barrels a day out of the market. There's been plenty of news to push the oil price up as well. So it's been in a kind of steady state now for a little while around the sub-80 level. At the moment, I don't see an awful lot of change, but as we know, the news changes daily in the Middle East. So what may happen there? This is a traditional time of year when oil prices do appreciate, when people are ordering ahead of the winter. But it has been a surprisingly steady period, I think, over the last couple of months. And it's almost as if all the various factors that are moving quite strongly in one direction or another are in some kind of unholy alliance, keeping oil prices at around this level, which I think is fairly priced.
We spoke about the Fed and the interest rate outlook thereof, but once we see liquidity starting to get tapered off, the full-blown impact of that will obviously be felt within the equity markets as well. There too, the emerging markets have yet not followed what the developed markets have done. We've probably fallen due to our own reasons. We've yet not seen a fall in the US equity markets to that great an extent. Is that a significant concern that once the US starts to peter off, the impact of that will be amplified for emerging markets?
I think so. I think if we see a slowdown in growth in the US, that will be bad news. I mean, sooner or later, of course, US stocks have to slow down. But once again, they're somewhat below their highs now. So we have seen a reasonable correction. We were due a correction. We needed a correction, just as we had in February, to allow the markets to move up again. And I think this is another correction in that cycle. What we were hoping, I think, is that earlier in the year that Europe would show better signs of growth. And certainly we're seeing that, but they are still very much green shoots rather than big signs of growth. And one of the key things we do is just need to see the European markets recover, because we need to see the euro recover. That's a very important cross rate. And the more the euro is weakened, the stronger the dollar is, and that has its impact on the emerging markets. Strong dollar usually means weakish emerging markets, and especially for those markets that are highly indebted. So I think that at the moment we're looking at business as usual in the economies. I don't see them slowing off. I do see the markets correcting, and I do see them finding a bottom. I think this is a correction in the 2018 correction year that is actually not surprising.
Got that. Richard Harris, we'll leave it at that. Appreciate you taking out the time and sharing your views and thoughts with us here on the show. Back to the markets then, and the Nifty seems to have given up all of its gains, now extremely flat. 10,309 is where the index is currently trading at. And you've got some big cuts coming into a counter like IndiaNivesh Bank, which has now lost about 6% in trade. And Ultratech Cement is down 3.5%. Some pains coming in from the oil and gas pack. So Reliance continues to grind lower and contribute to the Nifty on the downside. Now sub 1100 for Reliance. It's at 1,079. Tata Motors continues to grind lower. IOC, HPCL, BPCL, all of them witnessing pain in the session.
Okay, one stock though that is not under pain but doing rather well is Indiabulls Housing Finance. It's also seen its biggest intraday gain in 4.5 years. That's interesting. The management spoke to us earlier in the day and clarified that the company's 1,050 crore floating provision will take care of any adverse situation arising as a result of project financing not going as per plan. It's a stress case, he insisted. Listen into a small slice of that conversation.
There is a liquidity crunch in the financial markets, and then the theory is that if NBFCs are not funding developers, then the refinancing of the assets will stop, and that will put pressure on developers' cash flow. Well, that is the case more for early stage projects or new project launches if they will not get funding. But for mature projects which are largely getting money from already sold areas, which is servicing their projects, I do not see any issue as far as their ability to complete their project and pay down their debts. Also for a player like us, where 7,000-8,000 crore of assets are not covered by rental and are pure construction finance exposed, I don't see how the stress could be more than 1,500 crore. Even if you assume 20% of the assets really get stuck, we are talking about 1,500 crore, but we are carrying 1,050 crore of provision, floating provision, to take care of any eventuality. So structurally, if you look, we have built so many cushion over last 5-6 years by investing in additional provision, that even a doomsday will take care of all these issues. So I don't really see that apart from liquidity concern, the asset concerns are any big thing for us specifically. And by and large, market also, I believe developers, unless they've quickly built up that portfolio and early stage portfolio at that, right, there could be some issues. But yeah.
No, Mr. Huda, so just a small graphic is running slightly short of time. You are saying out of the total exposure to project financing that you would have, be it out of, let's assume the number is 100. Out of that 100, a majority is backed by lease rental discounting. And of the one that is pure project financing, you do not believe that more than 1,000 crores is the number that I heard you say is at early stage financing or small developer financing. Everything else is mature developer financing, mature project financing or large developer financing, which to your mind will not under any circumstance face any issues of cash flows or repayment. Am I correct?
Yeah, so I'm building a stress case scenario, not that
Yes.
I have these 1,000, 1,500 crore worth of projects which will underperform, but that is the worst case scenario, and for that I already have provisions on my balance sheet.
Mr. Hooda, just in continuation to that, recent report suggested that LAP loans backed by industrial property are the more problematic area right now. Does that feature in your book? And do you have exposure? And do you have mortgages in the form of industrial property?
So, we are the most seasoned book in loan against property. We started this business almost 14 years back. We were pioneers of this business in India, and we have been transparently sharing our loan against property pool with both the rating agency CRISIL and ICRA for their categorization, and 99% of our loan qualify for the top 2 grades out of the 5-grade scale. 98% of our loan against property business is supported by small business owners' house. So 98% is residential property supported portfolio. I have not seen, it has seen demonetization, GST, global financial crisis, 2013 fund dry up. It has seen many cycles over last 10-12 years, and under no circumstances has our portfolio, and we are the only one which publishes last 10 years static pool analysis of our loan against property. The maximum hit has been more like 70 basis point of NPA in that business. As we speak, we are at 45 basis point NPA, and I do not see them climbing in any manner because they are backed by residential property, and appraisal is pure cash flow backed.
Okay, got that. So the other concern here seems to be the actual disbursement that most NBFCs are getting versus what has been approved by bank lines or credit lines that they have. Is that a problem that you're facing? And how much have your disbursements seen a drop?
So clearly, when liquidity is tight, the liability side will have some difficulty in arranging liabilities. Having said that, we already have securitization as a big tool that we are selling down almost 7,000-8,000 crore of assets. We had planned more like 4,000 crore this quarter, but we've already tied up 8,000 crore of securitization, and of that 4,000 crore will come in within this month. Further, we have been able to roll over some of our papers. We've raised some bonds since 21st September. When the concern started, we've raised almost 3,500 crore of funds from the money market, banks, mutual fund, insurance companies. So we are hopeful that because of our huge liquidity we carry on our balance sheet, where we have more than 21,000 crore of cash, it gives a lot of comfort to our liability investors. Banks are warming up after RBI gave them a signal last week that they can lend to non-banks, and it will qualify for their high quality liquidity coverage ratio.
All right, that's the management of Indiabulls Housing Finance saying that they are likely to tide over this in a very smooth way, no liquidity crunch at their end at least. But Morgan Stanley has come out with a report on banks and how they feel that most of the larger banks will now stand to benefit because of the higher rates and the NBFC turmoil which is currently taking place, and their positioning as a result of that is likely to improve. So banks which were already doing well but have a stronger liquidity advantage now will fuel further acceleration of their pre-provisioning operating profits. So they prefer stocks like an ICICI Bank, an HDFC Bank, SBI and Axis Bank, and they feel that these are the banks that can capitalize more on the current market situation, and they've raised their FY19 to FY21 PPOP CAGR forecast to 24% from the earlier 21%. On the other hand, mid-sized banks, they're saying there'll be the unwinding of the growth premium taking place in the mid-sized banks, and they're reducing their earnings estimates by 5 to 15% for most of these banks. So they've downgraded a Yes Bank to an underweight. RBL Bank also has been moved to an underweight. You've got Kotak Bank valuation has been kept as equal weight. So some of the changes there in ratings for most of the banks, but primarily they're liking the big banks with a better liquidity positioning, and they're likely to gain the market share that some of these NBFCs will start to give up.
Well, certainly showing in the way some of the stocks have reacted today as well. So for example, ICICI Bank, and I'm not saying necessarily only because of the MS note, but ICICI Bank has gained about 4% today. And on the flip side, RBL Bank has lost about 6.5% today. So that stock has seen a deep gash, 6%, okay. And Yes Bank, you could argue that there's a bit of a continuation from where Yes Bank left in Friday's session. But now 3 days on a trot, we've seen some correction in Yes Bank, and that stock too has come off rapidly. So, well, a bit of a reaction definitely to this note that has come in from Morgan Stanley, and probably echoes what almost everybody else has been saying. Don't touch NBFCs. Looking at banks, look at the large private sector banks, and those are likely to react well. ICICI Bank usually finding a mention in almost all analysts who've come on screen and spoken about it.
Yeah, ICICI, HDFC, SBI, Axis, these are the good parentage names, and I mean they're the favorites for most of the analysts, but target prices still remaining a bit more elevated.
Yeah. And well, they won't fall as some of the other stocks will. In fact, that's the next piece that we're doing before we get in our guests, because 2018 has been all about the sharp drops in the broader markets, and the Nifty's 18% fall from its recent high is no different. As many as 218 stocks came off too. All of these have a market cap of more than 10,000 crores. I think that's the criteria, and they have fallen more than the benchmark index. The bulk of them correcting between 30 and 40% in the recent 52-week highs. Darshan is standing by with some details of this piece. Now, Darshan, what does your study bring out?
So basically, it's a study on time cycles and drawdowns, which we have seen. As you pointed out, the market cap has to be minimum of 10,000 crores as of Friday closing, and the data that we also will present will be as of Friday closing. If you're looking at it, one stock has corrected in excess of almost 70%. 5 stocks have corrected between 60 to 70%, but bulk of them have corrected anywhere between 20% to 40%. So 24 stocks are there which have corrected anywhere between 40 to 50%. 52 stocks have corrected between 30 to 40%, and 61 stocks have corrected anywhere between 20 to 30%. So in all, 218 stocks are there which have seen a lot of correction from their recent 52 weeks high. Now, if you look at some of the counters which we want to focus on, and these are all Bloomberg charts. First of all is Bajaj Auto. So what we are trying to say is the fact that Bajaj Auto is pretty much at the same level where it was when it started its rally. So from this point of time where it started its rally, it went up all the way to its 52-week high. It took them 421 days. The correction back to the same point has been in just 174 days, which gives an indication that the correction has been extremely steep, and problems started when they came out with numbers in the first quarter, and they said that they're going in for market share rather than margins, and that's why two-wheelers were down in trade. The other stock that we want to talk about is SJVN. Here also, if you're looking at it, from the same point where it was, and that was way back in September 2016, in September 2015, in fact, it took them almost 1.5 years to reach its recent high, and the correction from there is just 193 days. So the correction has been extremely steep. So that's the problem there. The third counter that we want to speak about, and that is Hero MotoCorp. Again, the rise to the top is 370 days. The drop is 280 days, and problems again, in terms of market share, in terms of the new insurance policies that have come out. So two-wheelers form a bulk of the stocks which are at 52-week high. The others basically are the financials, NBFCs, as well as cement stock. Piramal Enterprises, now this is very, very interesting. It has been a stupendous rise to the top. It started here, the rise, it went up all the way to almost 3,500, which was its lifetime high. And the correction, it took them 1 year. And the correction from that level to where we are is just 1 month. So whatever people made in 1 year, and if they were holding, they lost it in 1 month. So that's the problem. Again, problems with NBFC, concerns about the real estate lending portfolio. So all these things are something that caused issues for Piramal Enterprises. We'll get in the new other stocks also that were impacted. The other stocks that are basically from counters like the Indiabulls Housing Finance, IIFL, Ramco Cement. So all these counters are also the ones that are IIFL holding. Sorry. It took 238 days to move all the way to top, 150 days to come down. And basically, if you're looking at it, the correction has been rather steep from here also, because we are not considering the up move that came in. So if the correction that they managed to move was even higher here, again, concerns in terms of the book that is there. The next counter that we want to speak about is Indiabulls Housing Finance, and Indiabulls Housing Finance, if you exclude the 10% gain that is there today, it's rather steep because it's the only counter that's moved up. So we've not considered today's move. These are all as per Friday close. 263 days to top and 178 days it crashed. Similar, it managed to stabilize here, come back to levels of 1400, and look at the crash that's happened here. So this is much more steeper for Indiabulls Housing Finance. And finally, Ramco Cements is the last stock that we want to talk about. That one is the other one which saw significant amount of correction that came in. Even Ultratech is trading at 52-week high, low. Dalmia Bharat is trading at 52-week low. But this was at, the correction is much steeper. 322 days to top and 121 days down. So it's basically taking the stairs up and coming down by lift.
All right, Darshan, that's actually a good analogy. I mean, the kind of steep cuts that we've seen, and less than half the time that they've taken to go up.
Yeah,
I think the most interesting was the Piramal one.
Yeah. 1 year to 1 month.
Yeah, it's just been quite dramatic. Darshan, thanks for putting that into perspective. And those really attractive charts out there, to be honest, just showing the pace at which some of the stocks have come off. Okay, it's 2:30. We'll get in our guests in moments from now. Must say, the Nifty Bank has cooled off a little bit in the last 15 minutes of trade. So the intraday of the Nifty Bank should come up on your screen for just a moment before we get in our experts on board. There, you look at it. This is the intraday chart, and the last 15-20 minutes, there has been a bit of a pullback that has happened. And the Nifty Bank, for sure, it's probably dragged the index along with it as well. The principal culprit, I would reckon, is IndiaNivesh Bank, now down about 7%, 1465 and counting. So there's been a sharp drop in IndiaNivesh Bank in the session today, more accelerated in the second half of trade versus the first half. The others, the ICICI banks of the world, are still staying put, so they are not correcting as much, but IndiaNivesh Bank certainly come off and putting that little bit of pressure on the Nifty Bank too. Our experts are ready with us, so let's get in. Welcome them on board. Hemen Kapadia of KRChoksey with us with his thoughts on the charts, as is Ashish Kelkar of Kiran, Jadhav and Associates. Gentlemen, both of you, good afternoon. Thanks for joining in. I mean, let me start with you first. How are you approaching trade today? It's frankly, if you look at the broader markets, there has been a bit of a correction. The market breadth is not that positive. Are you bullish on the indices, or are you initiating bear trades?
Market is too tired to go down, Neeraj, frankly speaking. It's only the VIX which is preventing it from going up. We were down to decent levels, and now last few days we've staged a comeback. We are about 20. But frankly speaking, yes, 10,250, 10,129, 10,025, few levels. Maybe there could be some choppiness, but I wouldn't initiate a short trade. Once again, I'll go back to Devina. We speak about pullbacks every week. So seriously speaking, yes, I still think we saw pullback, didn't sustain. Now we are almost back to square one, Neeraj, and I still feel there could be some pain left, but once again, we'll end this week higher than last week's closing, and I'm still saying it's a pullback. Recovery, not a rally, but there is a bounce somewhere in the making.
So how would you capitalize on that?
I'd sell the 9,900 November puts, not October, because Devina, the premiums are almost washed out. I'm not saying you wait the whole of November, but you sell the November put option, because I think that should be safe enough without having to hedge it and stuff. So sell November 99 puts. I have a feeling we should be looking at 10,500 odd by the end of the week. So I have a plain vanilla put selling as far as the Nifty is concerned.
Okay. Ashish, what's your take on the index now? We're at 10,300. Do you see an approach sub 10,000, or probably more consolidation at these levels?
Good afternoon. I am expecting a more consolidation in this particular range because if I look at extreme short-term as well as medium-term charts, after such a big fall, but naturally the price will take a time correction. So the consolidation is expected in this range. And if we look at a daily chart, then the range for this consolidation on the lower side would be around 10,140, and on the higher side it is at around 10,450. So within this range, I am expecting the indices to oscillate. Now, after a breakout, either of the side will decide the next direction probably. But I am expecting next 1.5 week to be an oscillation in this particular index.
Okay, what about specific stocks? Let's try and get those going. Ashish, let's get in your stock-specific recommendations. See,
Godrej Industries is one stock which is on my radar. It has shown us a very weakness in the last 1.5 months. After a weakness, there was a consolidation, and now it is on the verge of giving us a breakout on the lower side. So currently the stock is trading at around 458 odd levels. My first target for extreme short-term charts is 452. But if the price breaks below 452, then the next target would be 410. So one can take a short position in this particular counter with a strict stop loss. The strict stop loss should be kept at around 464.
Any other stocks, or that's it?
That's it. As of now, this is a stock. During the show, if any stock gives me a breakout, I will definitely come out.
All right. What about you, Hemen? What about your stock ideas? I see you have a Maruti and a Grasim.
Yeah, Maruti is gone to 6,700. It breached 6,700, gave a bounce, came back, tested, is still looking set. So I'd like to tweak the levels a bit because I think the levels have changed. So buy in Maruti at 6,800, stop loss 6,600, target 7,200. Grasim also I'd like to tweak the levels. Buy Grasim at 870, stop loss 860, target 890. Once again same logic applies, Devina. Deeply oversold, downside appears limited. Yeah, if the previous bottoms break, I think all hell breaks loose. But before that all hell breaking loose, I think a bounce to test the recent highs of last week seem to be in the offing.
So Maruti's previous high was 7,200. You don't see it surpassing that?
No, I think Maruti is going to 7,600 or 7,800 in the next 3 to 4 weeks, Devina. Yeah. Post that, we saw double top in Maruti, and I think post that we could be heading closer to 6,000.
Yeah, I don't know if something's happened on IndusInd Bank in terms of the exposure that they have to IIFL or something else, but IndusInd Bank is down 9% as we speak, 8.25%. Okay, it was down 9% just moments ago, just a small bounce there. It's dragged the index along with it because the Nifty is down about now flat but marginally in the red, and the Nifty Bank has lost all the ground too. But IndusInd Bank is the one under pressure. Remember, the few days ago when they came out with the numbers as well, the bottom line numbers were slightly lower than what the street was working with. There was a contingent provision of about 275 crore rupees on RLF exposure. There's not much detail about that, but there was an issue. And while IIB may have a first right to the cash flows from liquidity or related events, resolutions for most of these companies look unlikely in the shorter term. I think that's the worry for markets, that any kind of exposure to IL&FS, the resolution would look very, very uncertain. Now, I'm not saying that's the reason why IndusInd Bank is down today. But there's certainly something that's happened for this stock individually to come down about 8%. We'll, of course, try and get you some details about this, but that stock is certainly under some serious pressure. The volumes too higher than what IndusInd Bank usually does on an average basis. On the results day, the volumes will obviously be higher, and recently the results have come out, so the 20-day average will also be skewed because of that. If you do the AV80, my guess is that you will see that the 4.1 million volumes that we're seeing on one exchange for IndusInd Bank would be higher than what normally happens on a 20-day basis for IndusInd Bank. Hemen, you want to come in on IndusInd Bank?
I think the days of the Superman bank stocks are over. It started with Yes Bank, Neeraj. Frankly speaking, the last 2 years, they must have given sell signals 5 times. And every time you thought of a sell, it came back and slapped you in the face. So I think those days are finally over. And we walked into a correction of a greater degree, much needed, much overdue. You can't have it running away for 10 years without any significant correction. So one, we walked into a correction of a greater degree. We could be going sub 1400 few days down the line. 1572 was important support. The stock has posted a fresh 1-year low. Notwithstanding some bounces, further pain seems to be on the cards, Neeraj.
It just talks of the kind of magnitude of pain that some of these stocks on the index, particularly Neeraj, that have been seen over the last month or so since we started seeing the correction in most stocks. So in a single day for a Nifty stock, we've been seeing India Bulls losing double digits, 15%. Reliance has gone down 6.5%. Today, IndusInd Bank, in 3 years, you've not seen the stock give up 8.5% on an intraday basis. So, I mean, that causes a little bit of a worry as to how much depth is there in the market right now to make these stocks stick like this.
Yeah, so one reason that somebody gave to me on an off-record or rather off-air chat was that the kind of selling that we're seeing happening in the large cap names is because the selling is happening on the FI side. I mean, Friday's session, for example, India Bulls Housing Finance, I think William Blair Fund sold 25 lakh shares or thereabouts. Now,
but that was just about 0.6% of the holding.
But symptomatic of what the foreign institutions are doing on the selling side. And versus domestic institutions not necessarily coming out, mutual funds are not necessarily coming out those index-based names right now. So the selling right now is happening on those usual suspects from the FI side, and there's not enough buying that's happening in that pocket. And maybe that could be one reason that you could think of why some of these stocks are not seeing a flow.
Yesterday, I think yesterday's tally was closer to 4,000 odd crores plus in the futures and options segment where FI has sold in, and that's just one day's number. So you're going to continuously keep adding the kind of sell-off. Closer to 19,000 crores, I think, is what they've already sold in the month of October
thus far.
Yeah, in the equity market.
And frankly, I mean, Reliance Industries is a classic example, right? You don't have Reliance going out like this unless there's some significant selling that is happening from a foreign institutional set of investors on Reliance or the basket at large. So I think the last few days of RIL falling too is probably a bit of a giveaway.
So the silver lining of domestic money coming in is probably in this market not that great a silver lining.
Yeah, and maybe just helping a different set of stocks altogether.
Yeah.
Well, let's get thoughts of Sanjiv Bhasin of IIFL. He joins us right now on the show. Sanjiv, good having you. Thanks so much for joining in. Just off the bat, before we talk about the markets and levels, etc. IndusInd Bank, Sanjiv, what are your thoughts? The stock is down 9%. The only thing that I could think of was then the results when they mentioned about some exposure to IL&FS and not enough details given. Maybe that was that one wrinkle on the peel. Otherwise, I can't think of anything else. But surely there is something more for this stock to fall 9% in a single trading session.
Well, it tells you that markets are trying to, the bears have the upper hand and they are trying to create more panic by selling some of the large blue chips. You couldn't have it with HDFC, the numbers were very good. And like you pointed out, most of the uneasiness on IndusInd was on the provisioning which they did for IL&FS. So I think the bearishness is overdone. We've seen globally China come out with good numbers. We think this could be the bottom of emerging market currency falls. And I think that from here onwards we would expect markets to bounce back strongly. Now the uncertainty is more to do with the local plays, with some of the mutual funds under pressure and the debt market. But local investors have been very, very resilient and very, very savvy this time, and in fact they have increased. They've been the SIPs have been even more. So I think that this is an opportunity to buy. We think this 10,150 to 200 should be defended. And this could be more to do with expiry related pressures. Now Kansai Nerolac indicates a lower earning due to GST, but that's not going to have the similar effect on Asian Paints. I think in the decorative segments they are going to raise prices, and any decline here closer to 1150 would be a buying opportunity. So you have to be stock specific. Overall, broadly, I think the market has got excessively bearish. I would still put my neck out that this is a good time to buy, maybe 10,700 to 900 by Diwali.
Sanjiv, this is a Morgan Stanley report which came out which said that the larger private sector banks most likely will be the beneficiaries of the loss for most of the NBFCs in terms of the growth and the market share that they'll get from them. Do you concur with that? Do you see more interest now in the private sector larger names like an Axis Bank, an ICICI Bank, an HDFC Bank?
Definitely. And what about State Bank? SR Steel is going for, there is no haircut, and they've already done excessive provisioning. So I think State Bank chairman clearly indicated that in the next 4 quarters, there will be at least 50,000 crores of write-backs. And I am very, very certain that SBI is going to show you very, very strong numbers. So you know, you can take it with a mixed bag, whether it's a State Bank or a Canara Bank, or like you pointed out, I think ICICI and Axis will definitely see very, very strong traction, given that most of the underpinnings of this NCLT will play out on the positive side. So, you know, markets are mixing everything with an NBFC story. And over there also it will be more stock specific, maybe a 1 quarter hiatus. I think the government is doing enough. They need to just step up a little bit on the confidence and talkbacks thing. I think this is, like I said, some of the corporate lending banks will definitely outperform.
Okay, got that. Ashish, you know, just want to come to you on some of the mid-cap names and whether or not you track them. And Adani Enterprise for one at 171. The stock in the last 7 days has moved up closer to 10% odd. Would you be a buyer in this stock?
If we look at the overall chart structure, now the chart structure is looking good, but it is poised at a very important level as of now, because if we look at the high which it has made in the month of September, now we are just near to that high and we are trying to breach that high. So till the time I don't get a confirmation on a closing basis, I will not go ahead and buy in this particular counter. Now this particular level, which where I would be comfortable buying, would be 175. If I get a close above 175, then for me this will be a better buy. In that case, my target would be at around 198 to 200 rupees, and my stop loss in that case would be 161.
What about mid-cap IT, Ashish? An emphasis, Mindtree. Yeah.
Okay, see, overall, if we look at the current scenario in IT, mid-cap ITs, they have corrected a lot and there is a further downside which is expected. For example, Mindtree, if we look at the Mindtree chart, the downside which is expected is at around 760. Currently it is trading at around 809 rupees. So I'm expecting a further fall in this particular counter. If I get a price at around 750, 760, at that level I would be comfortable in buying, and at that case, in that case, I will decide my stop loss and the breakout on the higher side.
Well, interesting movers out there. A bunch of these names coming off. Sanjiv, today we had the management of Indiabulls Housing Finance in the morning, and amongst things that he said, he laid out a stress case scenario and said that the maximum loss that he will have on the loan given out against on the lab book or essentially project finance would be to the tune of 1,000 crores, and that's at the worst. They also mentioned that the lab book lending is happening as it was happening in the past, and the rates have gone up by about 100 basis points, which their clients have accepted willingly. The stock has been beaten down really, really badly. Is this 9.5% uptick an indication of some bottom level buying, and do you reckon that that could continue? Would you be comfortable telling your clients to go out and buy into Indiabulls?
So Neeraj, it's a glass half full, half empty. Managements have been extremely positive, but the markets have severely punished them, and over ownership is always a bad signal. And you know that 6 times, 7 times price to book, leverage ratio of 7 times, all that is now unwinding. So I think even though they may sound optimistic, the correction is there, you will have to live with a little bit of pain. So like you've suggested, if I can suggest 2 names, it would be Bajaj Finance and Mahindra Finance. These 2 we are comfortable with. But on the other hand, like I said, in the mid caps, L&T Finance at this 118, 119 is a very, very attractive rate. We think they would have weathered the worst of the storm. The other one would be Equitas, where we think in the microfinance, their scheduled bank license should give them much more traction on the upside on the order book. And personally, I think all this, the loan against portfolio books which are being sold, those would be very good opportunities for some of the PSU banks. State Bank has already indicated an armory of 40,000 crore, and I think the actual substance lies in the new acquirer who will get a haircut and buy these. So I think that this will be a temporary transition. And like I said, I think at 650, Indiabulls was giving you that opportunity. Now in the short run, the over ownership is the devil in the devil in disguise, and that is mostly played out. So like I said, I think we have overdone the downside. We should see stability coming back in the next fortnight.
Right. That's on Indiabulls Housing Finance there at 714, up at 9.5%. Hemen, you're tracking the moves in Jet this week. The stock has seen a good up movement in the last 7 days, though today the stock is down almost 6%. But can one look at some bottom fishing here, or just stay out of the stocks because of all the negative news flows around it?
No, I think so, Devina, because 880 to 160 to 80, I think that's a very, very, very sharp fall. What you're seeing is a retracement of the rise from 170 odd to 235, Devina. So yes, bottom fishing, but I think we are at 216. Two levels which would be interesting enough to bottom fish. One would be 211, and the second level will be 205, Devina.
Okay. Now bring up specific losers and get some views on the result, boys. So Kansai and Nerolac, I think the numbers looked weak. The stock is down, what, 8-9% if I'm not wrong? Yep, 8.5%. Pat, remember, was down about 16%. The margins got eroded by about 400 basis points. It is a sensitive company to input price changes, and it's showing in the way the stock has reacted. About 1 million shares traded already. Is it also an indication of what Asian Paints could do? I mean, not necessarily homogeneous, but what's weighed in on Kansai Nerolac could also come in and weigh in a little bit on Asian Paints as well. Sanjiv, Bhasin, what are your thoughts on the paint space in light of course, what crude has done, but also with the kind of growth that these stocks can show in the next 3 or 4 quarters?
Yeah, so Asian Paints has been one of our top picks, and I can only reiterate a buy. We think their market share in the decorative segment is only increasing, and I think post Diwali you should see a much more traction on the volume front. Secondly, it's a myth that high oil prices are deterrent. They do hurt the margins, but these people are able enough to pass on that in price hikes. And it's a fallacy, Neeraj. The branded segment is doing extremely well. People want the best of brands, whether it's Kansai Nerolac or an Asian Paints or a Berger Paints, and I see no let up in that that sector. So I would definitely recommend a buy on Asian Paint. Asian Paint is privy to your consumption boom, and for something going on in the NBFC space, I think it will have hardly any effect on the paint industry. So I also think that the numbers will be better than estimates, and they would not be in the same category what a Kansai Nerolac told you.
All right, Asian Paints, their numbers are weighted. We'll just quickly highlight some of the key aspects that you need to watch out for. Revenues of Asian Paints are seen up by 11.9% and expected to come in at 4,772 odd crores versus 4,265 crores, with the EBITDA seen up by 12.8% at 903.5 crores. The margins expected to expand slightly, 18.9, so not too much of a dampener in terms of margins, but not an excessive increment either. Net profits are also seen absolutely flat at 578 crores versus 576 crores. That's Asian Paints consolidated Bloomberg estimates for you. But a quick, before we let you go, Sanjiv, quickly, any specific stocks that you would like to recommend to our viewers?
Yeah, so we are very bullish on ITC. We think that will surprise on the upside in the FMCG stroke cigarette category. We are also taking this opportunity in Maruti and Eicher Motors to go long. We think both are brands which you are getting once in a 3-year hiatus to buy. So even though the next 2 quarters could be slightly missed on the earnings, we think they will recover faster than the rest of the market. So Eicher, Maruti, ITC, Reliance, L&T, Ultratech, these are the time you should do basket or SIPs in these type of stocks and increase your exposure. We think the pharma pack is doing excellently, whether it's an Aurobindo or a Dr. Reddy or a Lupin or a Sun, DV's Lab. These are very, very prominent names. We are also bullish on the power space, Tata Power being one of our top picks at 65. We think power will be the dark horse of 2019. So some of the power financiers like PFC, REC or Tata Power, they should add a lot of alpha to your portfolio in 2019.
We'll leave it at that, Sanjiv. Thank you so much for taking the time out and joining us and giving us that perspective. Now, I'm doing a slightly differentiated chart of the day segment today. We're bringing out a chart of the Nifty IT, which is now below the 100-day moving average. And as you can see, over the past 18 odd months, this is actually slightly more than 12 months. But as you can see, somehow the Nifty IT has never managed to, never broken this 100-day moving average, which we've seen now happening in this cluster, the last 4 or 5 clusters, and I think Hemen will be able to throw more light here, but it has definitely broken below the 100-day moving average and come off, and the fundamentals, Hemen, seem to suggest that there is no immediate reason for people to come out and buy Nifty IT, because the results have left a bit to be desired, be it large caps, be it mid caps, save for TCS and the commentary thereof, and Infi may be meeting estimates marginally. Everything else has some or the other cloud around it. How significant is this breaking of this 100-day moving average?
Well, Neeraj, frankly speaking, it is significant. Like you said, it's taken a long time coming, but this cluster is going to be important. You know, we are flirting with this level, we are above it, we are below it. So somehow we are still hanging on to it, like in a last-ditch effort. If this decisively goes, and you also see if this particular level, this is the intermediate bottom over here, that's where you're taking support. So this level, if you extend a line over here, it comes approximately over here. We saw entire distribution going on, then we saw a breakdown. Now this is going to be important. Either it gives a pullback, or this is a bearish gap, which is not a good sign, but it might make an attempt to cover it up. So if this doesn't get taken out, then this whole thing will be just a stop in the downtrend, and we'll see a further downside coming in. So yes, coming back to your main question, I think this average is very important. Combined with this level and this average, that is why we are forming this cluster. So the cluster will either result in a recovery or a further breakdown.
Okay, so we essentially have to wait and see if indeed there is a pullback here, or does it consolidate and break down further?
Yes.
Which we'll probably get to know in the next couple of weeks.
Yes, I think so. And the way the markets are going, I think it might probably happen at the end of the week itself.
Okay, so let's wait and watch. But this significant Nifty IT since September 29th has lost about 10%, and a steep correction out here below the 100-day moving average. Speaking of IT, actually, as we slip into that break, here are one more IT management of a stock which has gotten clobbered today, and that's Persistent Systems. Agam Vakil managed to chat up with Anand Deshpande to ask him about how the quarter was and how the outlook ahead would be. Here are a small slice of that conversation.
If you look at the reasons why this number dip happened, in the last quarter we had a resell business with one of our partners where we do reselling of their products, and that has certain seasonality. So there was a dip in that this quarter, so that caused to a hit, and the digital numbers, which should have been going up, actually went down during the quarter. Now if you look at specifically the reasons for the digital number, a lot of that has to do with the fact that this particular project, which was a couple of $1 million for us, closed abruptly somewhere in the second half of September. And it had to do with facts that there were changes in the thinking in terms of where the product needs to go and what the solutions need to be, and our ability to deliver on their changed requirements and some of those issues around that. So this kind of closed abruptly, and that caused a little bit of a dip on the thing, and we had to also undo some revenues that we had from which we had accrued in the previous quarter. So there are some, this was pretty much a one-off, and there was the other one that was more in the services side, which has to do with the fact that some of our business which was being executed on site or in the US context have moved offshore, which in a sense is a welcome move, and from our point of view it improves profitability and it gives us better management abilities on running businesses when they run from offshore. And we are hoping more of that happens as we look ahead. But in some sense, that's a good sign rather than necessarily a bad sign, even though it affects the revenue mix in some way.
Among the deals and the pipeline that is into consideration at this point in time, is it likely that we are likely to see a little more lumpiness in several of your segments, say over the span of the next 3 to 4 quarters? And I do understand that to a certain extent, these abrupt closings is a part and parcel of the business. That said, when it comes to visibility, there are some concerns which are coming through a lot of the analyst reports. So my question then really is the expectation of lumpiness in your deals going forward over the next 3 to 4 quarters.
Unfortunately, some of this is going to continue in terms of the lumpiness, because see, what is happening is that we have sort of increased our dependence on the IP side of the revenue business, and we will see lumpiness on quarters. Traditionally, what we have seen, just to give a little bit of color to the lumpiness, we see better numbers on IP and resale business in our, should I say, odd quarters, which are even quarters for the calendar. So first half ending June 30th and second half ending December 31st is sort of where the calendar years are for many of our customers. And they tend to create lumpiness where we get better quarters in the, odd quarters for our financial year, and even quarters tend to be a little soft. So that's really why do you see some of this stuff. And as our business mix moves off of pure services to digital projects and also reselling and all the other IP related businesses, you will see that variability will continue. But that's part of the business. We want to make that shift. We are trying to move out of being completely resource driven to being service driven, and we are trying to find some other mechanisms to get some predictability on revenues by trying to look at managed services and various other aspects. But that's going to take a few quarters to, I would say more than a year, to see that a number contributing significantly to stability of revenues on a quarter-on-quarter basis.
With respect to IIFL Group, so some reports suggest that there have been certain deposits from Persistent Systems towards the group. So can you give us any clarity on this one?
Sure, and we have reported this in the printouts that are there on the website for our financial numbers. We have an exposure of about 43 crores with ILNFS in terms of investments that we had made with them. We had certain interest payments that were expected last quarter that came through. The next set of payments are expected in January, February quarter. So depending on what happens to them, we will decide whether to account for them or how to account for them in terms of the provisions that need to be made. So right now we have in the financial statements which have been audited, we have reported this number, but we have not made any specific provisions for this at this time, because that was felt that there is no real, we have not been defaulted as yet.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, रेज. अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities, और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर जनरेशन की पसंद.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
27 minutes left for the markets to shut shop, and the Nifty is now 0.4% lower in the session today. So there's a bit of a pullback, or rather pull down in the last few minutes of trade for the index. By the way, some numbers on your screen, and Inox Leisure, the principal culprit, 7% lower for Inox Leisure after those numbers. Hindustan Zinc is the other one, wherein revenues have come in at about 4777 crores versus 5309. But look at Inox Leisure there, 6.5% down. And I think the net profit at just about 12 crores versus 11.7 crores. And the revenue, consolidated revenue, is at 365 crores versus 311. So I'm guessing this is lower than what the street estimates were, as a result of which the stock has come off. Typically, growth stocks, whether in a okay quarter or a good quarter, not showing too much of profitability would be viewed slightly poor. Add to that the fact that Inox has a couple of uncertainties around it, with that break-off partnership from Book My Show, and then again doing some bit of a tie-up, and what happens to costs or otherwise. Early days yet, the stock may well recover, but on the face of it, the numbers don't look great. And on the face of it, Devina, the numbers from Hindustan Zinc also don't look that great, because revenues are down 10%, profits are down about 30%.
Yeah, actually a double of what the expectation was, at least on the revenue front. It is a seasonally weak quarter. The expectations on the revenue front was that they would see a dip of about 5% but I think that's more than that. So 10% dip. Hindustan Zinc's profits have also come down 30% at 1,815. That is probably in line. The expectations were that PAT would be lower by about 28%. So that's the profit numbers which have come in line. But nonetheless, it's a seasonally weak quarter for them. The stock's not reacted too much, at least for now. You did see it come off 1.5% right now for Hindustan Zinc at 282. We'll wait for volume numbers to see how that's shaped up, as well as the margins, and the EBITDA is also down about 16% that we are seeing, down about 15. We were expecting 15% on the downside, but Nikki is here. So
for Hindustan Zinc, maybe just before we get to Fab4, Nikki, just a quick perspective out here.
Clearly not a good set of numbers. Operating performance, 2,300 crores, what the numbers come out, 2,500 crores was what we were estimating with. The press release reads that the revenue from the operations have a decreased of 10% year-on-year basis, mainly due to the lower metal prices and lower zinc metal volume, which to an extent have been partially offset by the kind of volumes that we've seen both in lead as well as silver volumes. The rupee depreciation to an extent has also aided the revenue to an extent, but nevertheless we're seeing that kind of slide in terms of the operational performance. There is a miss out there, clearly gone to the commodity prices and the lower volumes that we were expecting.
All right, and the stock's recovering a bit from the lows of the day, but still a cut of 1.2%. But Nikki is also here to talk about Fab4 stocks. Nikki, what makes your list?
I'm going to start off first with Indiabulls Housing, where the stock has surged as much as 13% today in trade on the stake sale report. In fact, the interview that we had in the morning, where the company said that it's going to be open to selling the stake in Oak North Holding, part of it or maybe completely. Second in the list, actually two of the pharma stocks have made it to the Fab4 list today. I'm going to start off with Biocon first, which has risen more than 4% after the company has inched closer towards getting the breast cancer drug nod. On account of that, you have seen that up performance there from the counter. Also, we're looking at Unichem Labs, where the company has finally received an EIR report from US FDA for two of its manufacturing facilities, indicating the closure of inspection on these two facilities. Last in the list, we have Thomas Cook, buzzing stock for the day, I'd say, has snapped the 3-day losing streak and is up as much as 4.5% in trade today.
All right, Nikki, thanks a lot for that. So that's a wrap-up of the Fab4 stocks for today. Dharmesh Kant of IndiaNivesh Securities also joins us on the show right now. Dharmesh, how are you positioned for trade?
Yeah, good afternoon. Simply, as far as the markets are concerned, selling pressure continues to be there on the market. There is no letdown out there, and whether the results are good or bad, it's been painted with the same brush. Even if the companies which have been reporting good earnings, what we have seen is consistent selling coming out there. I mean, till Friday, around out of top 200 market cap companies, 44 have reported their earnings and 34 was from the non-financial sectors. So on the PAT basis, 16% kind of a growth we have seen, and for the financials, it is a 20% kind of a growth. But as of now, what is happening is just selling is being continuing. So one has to wait on the sidelines and watch this falling speed to stem before taking a call.
And the market position worsens further. The Nifty 50 down about 0.5%. The banks have moved into the red. So up until now, there was a stable performance from the bank Nifty, which was still perched in the green, but that's given way. 25,072 is where the bank Nifty is currently trading at, with the Nifty comfortably under that 10,300 mark, now approaching midway towards the 10,200 mark. Ashish, any particular stock that's catching your eye in the last half an hour?
Yes, I was looking at one particular counter, and that was UPL. Now, if we look at UPL, this particular counter is currently it is at a very important level. I am expecting a pullback rally in this particular counter, and my target would be around 640. Currently, it is trading at 632. So I would recommend a stop loss of 628 and the target of 640, 644, either in today's session or by tomorrow's trading session.
The other set of stocks which have lost a bit are the oil and gas names. So, BPCL down 4.5, Reliance down 3.5, HPCL is down about 2.5. Before we get in a fundamental perspective, Hemen, a quick chart check here. What do these charts indicate? Can somebody go out and trade these names?
One, too late to sell, too early to buy. I think all of them are in intermediate downtrends, maybe even long-term downtrends. Reliance the exception, 10-year breakout. It's a bull market correction. The other guys' monthly indicators have signaled a sell. So we would be looking for bottom fishing in BP, HP, IOC. Maybe there is some more time left. I'm not sure it's the right time to buy. The previous panic bottoms posted last week, a couple of weeks back, Neeraj, can be tested, and one would have to take a call there. Reliance could be under near-term pressure, but I think we could take this as a corrective move in an uptrend. But the other guys still look bad, and I think worse is not yet over. Notwithstanding a flip-flop, if you take a 3 or 4 week point of view, I think there's distinct weakness yet left in the entire pack.
Dharmesh, Reliance Industries in particular, 1,062 and down quite significantly. Month to date, I think it's a loss of about 15% for Reliance Industries. Is this the kind of fall that one should watch out for in order to buy a heavyweight name? The numbers were okay. Would you go out and buy Reliance?
See, the numbers were very decent, and the trajectory for the future was also quite encouraging, and it's been panning out the way it has been designed for Reliance Industries. So all the business segments were pretty good, and I think going forward even the GRMs will improve. But at the same time, I mean, the point here is, in spite of having a good and decent set of numbers and the visibility of the numbers coming through being there, but it's being selling spree going on. So what I would suggest is go on a staggered kind of a buying approach in Reliance Industries, and it merits a buy along with HDFC Bank, which also came out with very good set of numbers. So but one cannot go blanket all out buy on Reliance Industries. Business per se, nothing wrong out there, but I think the trajectory of stupendous growth will continue there.
All right, just pull up Europe as a pack to see how we're positioned for trade. The last time we took a check, I think about 40 odd minutes back, they were trading under by closer to about 1/3% or so for the FTSE CAC and the DAX. I think we're trading positive right now, 0.5% on all the indices. So not trailing what Europe is doing, our market witnessing pressure of its own. Take a look at the breadth of the market, and then we take a look at the turnover as well. So Nifty, they're now at the lowest point of the day. That's rapidly falling. The advances versus declines 1:4 almost, and that gap is widening as we speak. On the turnover front, NSE cash trades at 27,000 odd. You probably won't see that number exceed 30,000 by the time we close. NSCF, closer to 8 lakh odd crores. So that's probably in line with the average number that we have been seeing so far. Eicher Motors is the other one that's, seeing some amount of stability, and the stock is seeing some interest in today's session. 3.5% higher at 22,407. What's the sense, Hemen, on Eicher?
It's a bear market pullback, which might not yet be over, Devina. 20,000 to 24,000, 24,000 to back to 21,000. Now we are retracing this fall, so I think it's a temporary reprieve. It might last for some time. It might not be over in a hurry. But if I look at the longer term charts, Devina, I think we've seen highest volume in the last 2 years. And in the next 6 to 8 weeks, maybe probably by end November, we could be looking at 20,000 or below in Eicher Motors.
Okay. There were some news bits on your screen as well. As we speak, the index is down, yes, but just some news bits on your screen from State Bank of India. IIFL news as well. They've named some advisors, board seats for 2 FTAs, 1 restructuring advisor. But State Bank of India, they've approved raising 20,000 crores or up to 20,000 crores via equity and raising 5,000 crores via tier 2 bonds in FY19, but up to 20,000 crores in FY19 itself via equity. So would this mean that they are actually seeing strong credit growth, and as a result of which they want to go out and raise this money? Frankly, if there is one PSU bank that is capable of plugging in and capturing some of the market that NBFCs would have lost out ever so marginally right now and would lose out over the course of the next couple of quarters because of high cost of funds, SBI. I don't think some of the other PSU banks can come ahead and do so, but SBI equipped enough to do that. I don't know if this is a precursor to that the space will just open up for some of the banks, including SBI, to get some more growth. But they've taken this approval for sure. 260 on State Bank of India, one of the more stable PSU banking names. Dharmesh, today there has been a bit of a shift in the way banks are trading. The Morgan Stanley note probably causing some flutters. So RBL and some of the other high growth mid-sized names have come off. IndusInd Bank is down 9% today, not because of the note, but maybe because of other issues. And stocks like ICICI Bank are up about 3%. SBI is trading marginally, or at least was trading marginally higher. What do you do here, and what do you make of this announcement from SBI to raise 20,000 crores?
I think, Morgan Stanley, the report which they came out, they have started trading the market. I mean, every couple of months, how can a fundamental analysis change so drastically as far as the price targets are concerned and the valuations is there? So anyways, best is known to them, and that is what they have come out with. Optimistic note on the SBI fundraising, you have already detailed out, and that is like capturing of the NBFC business which they may lose going forward, and because the cost of funds and everything will go high for them, so it becomes easier for banks to fill that gap. But at the same time, there may be other concerns, and one should wait for the earnings of Q2 to pan out. And I hope there is no other big animal out there for the provisioning, because now all these subsidiaries of SBI has been merged, so you don't know if some unpleasant surprise comes out. For that you need an equity to stay afloat. So already GNPAs are 10% and plus kind of a level. So that is the I want to play a devil's advocate as far as this fundraising is concerned. And on the ground level, businesses are doing well on the consumption theme, so this money in circulation, liquidity would be needed, so it is there. But again, because of ILFS fiasco and the contagion which it may spur, is what is being feared heavily by the market, and that is why we are seeing selling in all the NBFC and BFSI segment per se. So one has to wait out this entire thing till it gets settled.
All right, that's on SBI. The stock's trading 0.5% under now at 260. But before we go ahead and discuss some more ideas and get you some closing strategies as we approach day's close, let's bring in Darshan now. He's joining in with a quick check on what the dealing rooms are talking about this afternoon. Darshan, good afternoon.
Good afternoon, Devina. One of the stocks that's been actively spoken about is IndusInd Bank. People want to know what is happening. So I spoke to a lot of people around what they think, and the prime reason that's coming out is the concerns on the ILNFS rights issue. Now, IndusInd Bank has exposure to ILNFS, and their commentary post the numbers said that the future will depend on how well the rights issue is subscribed or how ILNFS will go about their business. The rights issue apparently to newspaper reports has failed. So that brings in more concern on IndusInd Bank. So that's the latest casualty because of the IIFL saga. And this is what dealing rooms have indicated. The second is Indiabulls Housing Finance. Surprisingly, when the entire market is down, Indiabulls Housing Finance is up on a very high open interest build-up, 10% open interest build-up. What a couple of dealing rooms and where deals are happening have indicated that the promoter circle has actively accumulated in trade today. So Indiabulls is the second one. And another high valued stock, and that is Jubilant Foodworks. It's down 2.5%. Some of the foreign funds are actively selling Jubilant Foodworks. So that's something that we need to watch out for.
Thanks a lot for that, Darshan. Well, I really thought that even though Yatin is not there, they will not go to Yatin today. But since he was not there, she came to you. But anyways, thanks a lot for that, Darshan. So, well, that's interesting set of dealing room comments as well that have come in. 8% lower for IndusInd Bank as we speak, and I think the reasons, some of them maybe, or the fear, marginally outlined by Darshan as well. What else? Just looking at the stocks at the broader end of the spectrum, which may have cracked as a result of the index coming off as well in the last few minutes or last 20 minutes of trade. Century Ply as a stock has just fallen off the cliff, down about 10% now, but a large portion of those losses coming in the last 20 minutes. So look at that sharp cut for Century Ply. Suven Life is the other one which has fallen 6%, but a large portion of that cut coming in the last few minutes of trade. And Infibeam, by the way, which was down about 22%, now is down about 26.5%. 39 rupees for an Infibeam. Look at the volumes out there, 48 million shares traded on Infibeam. This would not be as large as the volumes which was recorded maybe 10 or 15 days ago when the stock faced that big gash, but higher than the average volumes for sure for Infibeam as well. But tell you what, I'm not going to ask about Infibeam as a stock. It's just very, very difficult to predict what this stock could do either on the charts or fundamentally. But a clutch of other names have come off. Now, Dharmesh, one quick question. These home improvement companies, be it paint companies, be it ply companies, etc., do you think they take a backseat for the time being if real estate sales are not secure and we're not sure of how that space and those sales would do? Would home improvement be a pocket that the markets would largely ignore for the near term?
Yeah, it definitely looks in that direction because real estate sales have not picked up and they have been trying hard for the last 2-3 years. We haven't seen any, realization picking up for any real estate companies in the listed play. And the Bombay market itself is down 10-15% if you go out for a real, buyout kind of a deal. At the same time, higher interest rate trajectory doesn't help, and uncertainty in the markets also goes against them. So all these home improvement companies, paint companies and everything.
Give us a second, Dharmesh, give us a second. We'll come back to you. But let's get in the management of SBI. Anshula Kant, MD and CFO at State Bank of India, joins us right now on the phone line to talk about the two fundraising pieces that they've just declared. Ms. Kant, thanks so much for joining in. This confidence of credit growth, I presume, which might be visible right now, and you might be feeling that it will come ahead in the offing as well, as a result of which this announcement, 20,000 crores of equity capital.
20,000 crores of equity capital, we have taken it to the board today. It is an enabling provisional for us to have as an enabler in the event we do need to raise capital. It was part of the MOU that we had signed with the Government of India also as part of the ease of doing business. The other one is for the Tier 2 bonds. As you know, Tier 2 bonds, they have a grandfathering provision, and the older Tier 2 bonds are falling off. So that is as per business as usual. We may raise up 5,000 crores in Tier 2 bonds in the remaining half of the year. And so largely it is an enabling provision for credit growth purposes. Right now we are seeing a good credit growth. It is anywhere between 11 and 12% year on year, domestic credit growth.
Okay. The belief that some people would also have, Ms. Kant, is that the space that is now getting vacated by NBFCs would, on a lot of these low-yielding businesses that they were in, would be at best captured by one or two banks, and one of them would be SBI. Would you have that confidence as well?
We have our own risk appetite and credit policies. Based on that, wherever we see good opportunities, we'll definitely pick up. we are picking up, and that is how the credit growth has picked up. This is one more opportunity which we will examine and exploit if it suits our risk appetite.
Okay, and would this, I mean, would you be setting this timeline? I heard you say that this is an enabling provision, so you may not necessarily go the whole distance.
No, enabling provision up to March 19. There is a timeline up to March 19.
Yeah, but would you, I mean, would you internally have some thoughts about whether or not you would want to raise some part of this money until, say, this calendar year or otherwise?
So, didn't catch you. Hello, I couldn't catch your question.
No, I was asking whether you believe that while the enabling...
Hello?
Can you hear me, ma'am?
Now I can hear you. Yeah, go ahead.
I was asking whether while the official statement is that the timeline is till March 19, would you reckon that some part of the fundraising could also be done in the current calendar itself in order to get growth capital?
See, this, when we do it, if we do it, how much we do it will depend on the markets and what the position is in the market. So, you know, in very volatile times, you have to, you know, judiciously see what timing we will see.
Okay.
So right now, I can't comment any more than that on this. And one last thing before I sign off, I am no longer the CFO. I am the CFO is Prashant Kumar now. I am looking after stressed asset risk and compliance action.
Okay. Our apologies, ma'am. But thank you so much for joining in and giving us this brief perspective. That's Kant, the spokesperson for State Bank of India, if I can use that term. But no timelines as yet. I doubt that in any form or shape would there be any breach of capital limits would they were to do it. And they mentioned that they would have taken note of all of that. But up to 20,000 crores to be raised up till March 2019, if and when they do it, these are the timelines that they are putting out. That's State Bank of India. Well, flat in the session today. Okay, before we move any further, I think very important to get in some quick trading calls. Just 5 minutes left for the markets to shut shop. Ashish, I'll come to you first. Your top closing strategy.
I would again add on to the earlier stock that I have recommended, and that would be UPL. When we were talking about UPL, the stock was trading at around 632, and currently it is trading at around 636. My target was 640, and the second target was 644. So yes, I would go ahead and add a further quantity in this particular counter because it is giving us a very good breakout. So that would be again my pick.
All right, that's UPL, which is Ashish's pick. Hemen, what's your closing strategy?
Devina, I'd have a BTST on Maruti.
BTST on Maruti. You want to give levels for BTST?
Yeah, we are at around 681. We are at 682. We are at 6817 right now. So I'd say a 50 point stop loss and a 100 point target for a BTST.
Okay, Dharmesh, while obviously not a very short-term idea, but something that you're really convinced of that you'd like to bet money on?
Yeah, I think NBCC, you know, looks very attractive and at current levels. The valuation looks very compelling. Today also they got a good order inflow coming to the play. So almost, you know, 11x to kind of order book to sales they have as of now. So gives it a sound revenue visibility of 20-25% CAGR for the next 2-3 years to come into picture. And with ROEs in high teens, debt-free, sound cash flow. So we have recommended this to our clients today to accumulate in their portfolio. With our, you know, based on FY20 earnings estimate, the price target is around 77. So almost 40% kind of an upside from current levels. So this can be bought into.
Right, NBCC there. Just one pocket, which is the cement space, and two numbers that have come out from there, which have sort of disappointed the street, and the stocks have been, you know, punished accordingly. Ultratech reported its numbers as well as ACC. The stocks down in today's trade as well. Hemen, what would you do with these stocks?
I think the entire cement pack is from a slightly longer term corrective. But if I were to specifically look at Ultratech, Devina, we've been down from almost 4,500 to current levels one way. The monthly picture has been totally, you know, annihilated, so to speak. Short term, I think volume of the last couple of trading sessions has been significant. I have a feeling we could be seeing a small recovery, assuming 3450 holds. But if I look at the longer term chart, Devin, I think a monthly peak has been made. I don't think the recent all-time highs should be seen for the next 12 months or so.
Hemen, stay on. We'll take in closing thoughts from you post-market close, but this is how the markets are shutting shop. About 0.5% off or thereabouts for the Nifty. 2.5 minutes left for the markets to shut shop. The Nifty Bank marginally in the green, but remember at a point of time, the Nifty Bank was up 1% in trade. The mid caps and the small caps have been beaten down. The market breadth is firmly in favor of the decline. So let the mid cap and the small cap indices come up on your screen and you'll see a fair bit of red. About 2% for the small caps, about 1% for the mid caps. It's not been a happy hunting ground if you're indeed looking at the broader end of the spectrum. But let me highlight the large caps. Devin, I'll bring you up to speed with what's happening at the broader end of the spectrum. IndiaNivesh Housing Finance, a good move today, about 9%, a bit of a relief rally there. Eicher Motors, a bit of a relief rally. ICICI Bank, Morgan Stanley upgrade probably doing the trick. Stock up about 3.7%. Some gains for Bajaj Auto, HCL Tech, and Maruti, as well as HDFC Bank post its numbers doing reasonably okay. What's not doing well? IndusInd Bank about 7% lower, BPCL 4.5% lower, Ultratech about 3.7% lower, Reliance has a downtick of about 3.5% too, Asian Paints about 3%, IOC about 3% in trade, and Bajaj Finserv drops about 2.8% as well. ONGC, HPCL, Kotak Bank are amongst the stocks that are correcting in trade today. So a lot of pain in OMCs or oil and gas, and select banking names like Kotak as well as IndusInd Bank. But the broader end of the spectrum, lots of results as well, Devina, to which the stocks reacted. But what are you spotting?
Well, a little more pronounced in terms of the pain for the broader market. So the mid-cap index and the small-cap index, the losses there compared to the benchmark indices are a little bit more significant, closer to 1% plus for the mid-cap index. Small-cap index, almost 2%. Individual stocks and Infi Beam by the end of trade, towards the end of trade, was down a heavy 28% on the volumes. That spiked as well. Jet Airways being the other one that saw some steep cuts of closer to about 6.5 to 7%, did manage to come off the day's low, but still closer to about 214. RBL Bank is the other one, again on the back of the Morgan Stanley report. This stock takes a knock in this session. Subin Life, VIP are some of the other names. Kansai Nerolac reported numbers, some pressures on the EBITDA, high input costs there because of crude oil prices being up. The stock was beaten down post numbers, down 6%. Inox also reported numbers, disappointing the street. The stock saw a steep a plummet of 6.5%. IndiaNivesh Transport is the other one that loses out. Persistent reported numbers yesterday. The stock, since the start of the trading session, lost double digits, and by the end of trade just managed to recoup a little bit of the lost ground, but still down by about 11.5%. Divan Housing Finance is the other big loser in trade today. Amongst the gainers, Repco Home Finance is up and L&T Finance Holdings is up. From the pharma pack, you had a Biocon which did well. Torrent Pharma also did okay for itself, and M&M Financials and Emphasis are two other names that managed to hold ground in today's session. But all in all, it was a day of the bears taking a grip of the market, and even in the broader market space, you can tell by the advanced decline ratio that it was a completely bear-dominated market, 1:4 almost in favor of the declines.
Well, let's get that chart up then, and just start off with the market breadth first. And yep, about 1152 to 424, so near about 1:3 or 1:4 in favor of the declines for sure. The turnover, Devina, and we were talking about maybe nudging the 30,000 crore mark on the cash side. Let's see if that's happened or no. Hang on.
All right, 30,500 on cash and about 8,70,000 odd crores on the futures and options side. So that's seen a slight bit of an uptick, at least on the futures and options side.
Yeah, expiry week, you probably expect this, and maybe this will only nudge up during the course of the week ahead as well. The contributors list, and maybe Reliance and HDFC Bank would be on opposite sides. Let's pull them up. Yes, indeed. ICICI Bank, a meaty recovery today. And
so both these names, ICICI and HDFC, both made a feature in the Morgan Stanley report of stocks, banks that will probably take market share off from the smaller NBFCs. IndiaNivesh Housing Finance, obviously, stocks in start of trade, but if you actually convert the 9% gain, it just adds about 5% to the index because of its lower weightage.
Yeah, but Reliance Industries continues to fall, and 13 or 14% in the last month or month to date clearly speaks volumes. IndusInd Bank, because of the fall today, I think both IndusInd and Kotak, some very interesting moves in the session, and Asian Paints ahead of the numbers.
Yeah, and looking by what Kansai Nerolac reported, probably a precursor to what Asian Paints could report. Let's wait and watch.
Yeah, what happens there? Okay. Final thoughts from our experts, and we'll ask Hemen about the view on maybe some of the global indices as well. But Ashish, to you first. How does this set us up for the expiry? What do you expect the next 3 days to throw up, either on the Nifty or the Nifty Bank?
I would prefer to talk about Nifty because Nifty, if we look at a long-term charts, on a weekly charts, and if I draw a trend line by joining the bottoms which were made in the recent past as well, the precise trend line is at around 10,140. So I am expecting a expiry between 10,300 and 10,140 between these two levels. But my overall judgment is a little bit of, or overall bias is negative. So I am expecting an expiry between 10,200 to 10,140 in these between two levels. I am expecting not the Nifty should not breach 10,140 because if this level is taken off, then there will be again a free fall in the Nifty is what the charts are suggesting.
Ashish, I believe you had another stock that you wanted to highlight.
Yes, I have another stock, and that is Kapadia Ceramics. If you look at this particular stock chart, it has given us a breakout on today's closing basis of a down flag, and down flag has a bearish implications. So I'm expecting a further fall in this particular counter. So tomorrow someone can go ahead, take a short position. Stop loss would be 339. So it's 9 rupees from this particular level, but the target of this particular counter would be 306. So this will be a positional call for next 2 to 3 days. Strict stop loss should be has to be followed of 339 on closing basis, and the first target would be 306.
Okay, that's Kapadia Ceramics there. Hemen, what about you? Your closing thoughts?
Frankly speaking, a bit perplexing. Maybe markets are deeply oversold, but I have a feeling that my level is very close to what our other guest has, 10,129. I think that cracks, I think we'll have major problems. Till that doesn't happen, I think we'll remain fluid, movement on either side. I still feel the downside seems a bit capped, but if these levels break, yeah. And with the VIX at 21.36, I think it's anybody's guess, Devin. I think one should stay away from the markets for the time being. But I wouldn't be unduly bearish, despite apparent bearishness.
Okay, I mean, quick thought on the US markets charts. You wanted to speak about them?
Yeah, I think if you look at the Dow Jones, Neeraj, the month is not yet over. We're on the verge of giving a downward bar reversal. 24,900 support. We see a bounce, which is possible, but I have a feeling we've seen an intermediate top in Dow Jones, Neeraj. I don't think this level looks like coming in a hurry, at least for the next couple of months. So, we've been, I don't think there's a connect between Dow Jones and India because it's been going up and we've been going down. But I think whether you look at Germany, you look at France, they all seem to have made intermediate peaks. So Europe and US seems to be toppish, heavy, and with a negative bias.
We'll leave it at that. Hemen and Ashish, thank you so much for joining in today and giving us your perspectives. Really appreciate your time. But with that, it's a wrap on this leg of Countdown from Devina and me and the team that put this show together. Thanks so much for watching.
Good news,